Hey, good afternoon, everyone. Welcome to today's Economic Alliance webinar, Solar Energy for Commercial and Agricultural. And we want to thank you for joining us today. I'm Thane Phelan, the Director of Communications Marketing and Creative Services here at the Economic Alliance. And we want to thank you for joining us. The Economic Alliance webinars are designed to provide members with timely, practical insight from professionals in our business community. Now, these sessions are intended to be educational and informative, giving attendees the opportunity to learn from subject matter experts on issues that matter to the organization and your day-to-day operations. Today's webinar focuses on solar energy and what commercial and agricultural businesses should know as they explore energy options, long-term savings, and operational considerations. We're pleased to bring you a presenter with deep experience in this space and strong knowledge of Iowa's energy landscape. Our presenter today is Chris Hoffman, Senior Solar Energy Consultant with Eagle Point Solar. Chris has worked in the solar energy industry in Iowa since 2014. He's an Iowa native and also is the mayor of North Liberty. He brings valuable perspective on how solar energy can support businesses and agricultural operations across our state. Hey, Chris, thank you for being here. And at this time, I will turn it all over to you.
That sounds great, Thane. Thanks for having us, and thanks for all the work that you guys are doing behind the scenes to bring this content to everyone. I know that it's not always easy, but you guys make it look easy. I try to get a screen to go away. There we go. As Thane mentioned, I'm Chris Hoffman. I'm with Eagle Point Solar, and I really kind of want to start by introducing us a little bit and who we are, and why the topic that we'll talk about today is something that we've not only been doing for a long time, but we take great pride in what we do. Eagle Point Solar was founded back in 2010, and at the time was one of the first solar companies in Iowa. The technology's been around for decades on the East and West Coast, but it made its way to the Midwest here, largely in part of companies like Eagle Point Solar. To date, we have over 100 full-time employees that take care of everything from start to finish, paperwork to physically turning the screws on getting a solar project installed. Our home office is up in the Dubuque area, and we have 5 local owners up in that area. But I'm coming to you from our Cedar Rapids location, which is down by the Eastern Iowa Airport. Our office down here is fully staffed, and anyone that would work on your project here locally is most likely just going to be coming out of the Cedar Rapids office. That location in Dubuque serves as our headquarters, obviously, and it allows us to serve the state of Iowa, the states of Wisconsin, and Illinois as well. And to date, we've installed over 5,000 solar projects, and you name it. What I would probably say in the beginning is that these are not solar projects that you're going to see that take up acres and acres of space on the landscape for utility companies. Our solar arrays are going to be directly going to the meters at homes and businesses, cities, school districts, counties, nonprofits. So there's a little bit of a distinction, but that's the world that we operate in. A couple of highlights. I won't go through this page entirely. As I mentioned, our office here in Cedar Rapids is fully staffed with master electricians, installers, designers, utility specialists, and most importantly, I think, is on the bottom left-hand side there. As an organization, we utilize the North American Board of Certified Energy Practitioners, otherwise known as NABCEP. It's a tremendous resource for you as a consumer, and I would encourage you to go check out their website. But most importantly, though, they are an incredible resource for us in the solar industry. They provide a tremendous amount of education and ultimately certification, which is ultimately the gold standard for solar knowledge across the United States. About half of the companies that do solar energy in the U.S., though, don't have anyone on staff that is NABCEP certified, which is kind of unfortunate. But the other half of us that do generally are going to have 1 or 2 people on staff that are NABCEP certified. And as you can see there on the screen, I'm lucky enough to be surrounded by 13 people in this organization that are NABCEP certified. And what that means to you as a company or an individual nonprofit considering energy from solar energy is that that's ultimately going to save you time and money, which is both are precious resources. Today, I'm going to cover 5 topics. It sounds like a lot. They'll be quick, I promise. First of all, I want you to understand how the solar technology works and how we take sunlight and turn it into electricity. I'm going to start right out the gate then with understanding how solar will pay for itself. And as we'll talk about, there are some tax incentives and some deadlines that are currently in place that you might already be aware of. And if this is the first time you're having this conversation, I hope to enlighten you on what we're up against right now as well. And ultimately, some of the softer sides of solar, some of the environmental, the doing good that you will do for your business and also your community around you. And then finally, some simple ways that you can get started if this is something that you're interested in pursuing. First of all, I think I told Thane recently that this is the second most favorite document that I have when I'm talking to someone new about solar energy. And it's simple, and I think maybe that's partly the charm of this document. But when sunlight is hitting a solar panel, the solar panel is engineered and the to create electrons, and those loose electrons come out of that solar panel as a direct current energy. But if you are any knowledge about the United States electric grid, everything that we are delivered as a country is coming to us as alternating current. So about 100 years ago, they decided that alternating current was quote unquote safer, but the DC energy is how a solar panel creates electricity. So that energy needs to be inverted. So when we're talking about a solar array, we're talking about a combination of solar panels plus inverters. And once that electricity has been inverted to alternating current, it's usable to you, and it's also usable by your utility company. And that's an important aspect that we'll dive into a little bit more yet here during this discussion. Once the electricity has been made usable, the business, your meter, your uses are the first place where this solar energy it will go. It's always going to get in front of your utilities grid availability while the sun is shining. And that's an important thing because on a sunny day, we're recording this in the middle of April. It's sunny outside. If any solar arrays are in place right now, they're probably making all the electricity that that building, that meter, that farm needs at that moment. And what they're probably doing also is they're creating extra energy. And this is the final step for sometimes for solar energy. When you're making electricity that you don't need at that moment when it's being created, it's going out to your grid. And at that point, the energy is becoming usable, not just to the grid, but ultimately to your neighbors. That electricity is being created and it goes right out to them and probably just down the street to the neighbor that can also get it. Your utility company is going to buy that energy back from you at various rates depending on the utility company that you are connected to. So that transaction does have value, and that's why it's important that that energy is made usable to you as well. Before I get started on some of the ins and outs, these are some common questions that we get asked about solar energy. So if you've thought about these in advance, or maybe thought of them in the past and had some answers, I want to start there because this kind of takes the elephant out of the room a little bit. The biggest question that we get is, what if this technology changes? And I'll be honest and I'll say it's going to. This technology has been around for about 50 years, and the solar panels that we're using in 2026 are much stronger. They're much more efficient. They're more compact than those built in 1976. So the equipment that we're using today not only is more efficient than it was 50 years ago, it's also going to carry warranties with it that are 25 and up to 30 years in some instances. So the innovation is there, and it's going to continue to be there. And being able to put a system in place today that is going to save you money and resources in the future is ultimately the point. We're going to talk a lot about tax consequences. Right now, there are some tax liability that solar energy can offset. And this is something that we'll talk a little bit more about coming down the road. The investment tax credit for a solar project actually carries back 3 years. And if you don't have the liability this year or next year, it's there for you to pick anytime in the next 20 years as well. So timing for the investment tax credit is not critical. It's just it's an element. It's a nice feature of this. You might be concerned that you don't have space for this, so that your roof's not big enough, or it needs more support, or so those types of questions. And I'll generally say that we also have those same concerns if we're talking about a roof, and we want to make sure that that solar equipment is going to sit up there. And oftentimes, your jurisdictions that you're sitting in, whether it's a city or a county, are going to have rules that require us to make sure that that structure that you're putting solar on will support it, or that there might be enough space out there in the land if it's going to be something put on the ground. And the last thing that we hear is that what if I just waited for this technology to get cheaper? And while that might have been a good argument 5 years ago, the solar energy's research and development has really hit a plateau in some ways that the costs have kind of been the same for about the last 5 years. There's some ups and downs, of course, but they're generally not too much different than what they were even 5 years ago. There are some exceptions, of course, but what's critical in this conversation today, and why I was really happy that the Economic Alliance was able to allow us to do this presentation early in 2026, is that there's a lot riding right now on some investment tax credits and depreciation that's going to change as this year phases out as we move into 2027 and ultimately into 2028. So those investments and those tax credits far outweigh anything that might happen from a price reduction, if at all, over the next 5 and 10 years. I'm going to start with why solar energy is always going to make sense, and this is going to be incentive heavy, obviously. But as you'll recognize, is that solar is one of the few investments that you're going to be able to make in your business, in your organization, that will always pay for itself. The chair that I'm sitting in right now, the computer that I'm working with you on, these aren't things that pay for themselves. They are just a feature or an expense that I have that I get to use for a period of time. Solar energy is not like that. It's actually something that you can see a deadline on. These systems, when they're installed with these incentives that are available, are typically going to pay for themselves 3 to 7 years. And you're going to see a variety of time frames and rates of returns, and all of those are going to depend mostly on your utility company that you're connected to, and really what circumstances that you have there at your meter on the roof or on the ground. But typically, a solar array will pay for itself for a business because of the elements of investment tax credits and depreciation, somewhere between 3 and 7 years. All of the equipment that we're going to be using is going to come with a minimum of a 25-year warranty with them as well. So you've locked in that savings for the next 20 years once you've paid yourself back from that. And the average ROI on these types of systems is somewhere between 8 and 12%. And once you've gotten to the point where the system has paid for itself, there's really not anything that you have to do. There's nothing that you wouldn't have to do anything from day one other than make sure it has insurance on it. But there are little to no costs for maintaining a solar array from day one. So when we say that there's no cost per kilowatt hour to make that electricity, once you've paid yourself back and you've seen that investment return itself, there's really no cost for it. So the line on the bottom is something I really it really catches my eye. The question isn't necessarily if solar is going to pay for itself, but it's a combination of being able to capture these investment tax credits and depreciation now, just to make it pay for itself sooner. And as you'll see, these have a long lifespan anyway, but it just pays for itself a little bit sooner. Depreciation for a solar project is a little bit unique. And for those of you that are familiar with the taxes, the tax work for your business, and you're the ones that are depreciating land and building and structures and inventory, there's a different depreciation schedule for all of them. Solar energy is something, though, that can be depreciated in year one. So the depreciation on here is pretty quick, and it's something that can pay for itself, obviously, quickly as a result of that. The next slide, I'm going to dive into a project example, and you'll start to see some of these numbers on this slide right now. But the beauty of this depreciation as it sits right now with the tax credit is that you actually get to keep half of your tax credit and apply it towards your cost basis. In most other depreciation scenarios, if you're given a credit, you don't get to use any of that. So this would normally be a 70% cost basis for a project, but you get to keep half of that 30% tax credit and apply it towards your cost basis. So you actually get 85% of the cost of the project as your cost basis. On the right-hand side, we'll talk a little bit about some of the changes to depreciation that we get to experience right now that were a result of the One Big Beautiful Bill that Congress passed last summer. While the solar energy technology itself, the investment tax credit, is being shortened, and there were some negative consequences to what was in place for the tax credit, the incentive. It was supposed to roll on until 2032, but it will be wrapped up next year. The depreciation was actually one of the bright lights in that it was allowed to be taken from a 5-year schedule down to a 1-year schedule. You had to use it all. And that's an important thing as well. You do have to use all of this depreciation in year one. You don't get to carry that forward like you do the investment tax credit. So plan accordingly. And as we say on here, please talk to your tax advisor on how best to soak that up. It's early enough in the year, and hopefully that's something that you can still manage. As I promised, this is an example of how the math works for a solar project's investment, and partly. And I will say that a solar project doesn't cost $500,000. The cost of a system is going to vary depending on how much electricity you use. And I'm just using that number because it's easy to work with. It's a round number. It kind of gets your attention. It sounds like a big investment, and don't get me wrong, it is. But if the system's cost was $500,000, you're going to be able to take 30% of that back as a tax credit. And that's the good stuff. That's a direct reduction of the taxes that you would otherwise have to pay in that year. So if you were thinking you'd be paying $150,000, $200,000 in federal taxes next year, you get to wipe out 150,000 of those in this scenario because of this investment tax credit. And as I mentioned on the previous screen, depreciation is a big part of this, and you get to keep half of that federal tax credit. So on the federal side, you get to apply 85% of that cost basis for depreciation purposes. And in this illustration, we're using 24% corporate tax rate at the federal level. Again, it's a placeholder. Your corporate tax rate might be lower, it might be higher. But when you add those two together at the federal level, you're looking at an incentive in just those two tax consequences that's more than half of the project's cost. What I don't have illustrated on here is the state of Iowa also has a depreciation. Again, the same formula applies that you're looking at your corporate tax rate here in the state of Iowa. So that's also something that would come back to you as well. The net effect in this case of the cost for a solar array is just under $250,000 in this example. And depending on the utility company, how large your solar array is, the rate that you're paying for that electricity, you could see $45,000 to $70,000 a year saved just by making it yourself. And when you put those together, that simple payback is where I got the 3 to 7 years. These systems will pay for themselves with combinations of tax credits, depreciation, and just the utility bills that you may not have to pay. So the combination of those allows a payback then in this case of 3 to 7 years in this example. Last stop for businesses in the financial case is how to pay for it. And I know that if you're a business owner or if you're the one that's writing the checks for the business, you know the best way to get to money. And this is not by any means meant to reinvent the wheel, but it's an overview. Making a cash purchase of this investment is the quickest way to that ROI. You own all of those tax incentives, but you do have to come up with the money. This is money that needs to be planned for, most likely, or money shifted around instead of other priorities. These are for businesses that have a strong cash reserve and can take and would benefit by that tax incentive. Lending for solar arrays is out there, whether it's your own institution, your own bank or credit union. There are lenders out there that do just solar loans. It's the same as owning the system outright. You're just paying for it differently. So you will also benefit from those tax incentives directly in that case. And as you might know, and borrowing money just slows down how long it takes to get your investment back, and it just reduces that ROI slightly. If you're a business in the rural areas or on the farm, working with farms, the USDA through and also the Small Business Administration provide loans that there are some pros and cons to it. They provide lending that is sometimes less expensive, less of an interest rate to do so, but it's sometimes something that you have to qualify for. You have to have creditworthiness, and sometimes those applications can take a little while. And we still have a little bit of time left on the clock in this year and next year, and I'll talk about that coming up next year. So those loans might be more appropriate in that case. The last slide on the bottom right there is if you're a company that's formed under an ESOP, you're not an LLC or a C Corp or an S Corp, but you're an ESOP instead. You can't take those tax credits and incentives the same way as S Corps or C Corps or LLCs can take them. In those cases, getting into a lease payment is the best way for you to utilize solar technology and ultimately pay for it as well. You will eventually be the owner. You just have to get there a little bit differently. If you're a city, a county, a nonprofit, oftentimes those budgets and capital funds available are not as strong for good reasons. You're intended to just keep it lean. You don't have the dollars set aside to make an investment like this sometimes. So what was created here, actually, we helped create this about 12 years ago, was an item called a power purchase agreement. And those financing tools are great ways for nonprofits to take advantage of being able to make a solar array work, but they don't have any upfront capital expenses as well. So I won't go into any more detail on those, but just know that there are ways to get to the final result. It's just a matter of which vehicle that we use for financing it. I want to dive into, as promised, the tax credits and this impending deadline that we're all looking at. If you have been paying attention to this at all over the last year, this is going to be repetitive for you. But if this is the first time that you're really thinking about solar, first of all, I'm glad that you're joining us today. These are the cards that we're being dealt right now, and we still have a lot of time to get into it. So I recognize that this will be a summary for a few of you, but it also might be new information for those that haven't considered this. So I want to dive into it as if this is the first time that you're hearing about it. First of all, what's the investment tax credit? And it's, as I mentioned in a previous slide, it's 30% of whatever your project's cost is. So if it's a $100,000 project, you're going to be able to get 30% of that back as an investment tax credit and reduce your tax liability by that $30,000. It's a direct reduction of those. That investment tax credit covers every single aspect of a solar array, whether it's the solar panel, the inverters, all of the wiring, racking, labor, paperwork, permitting fees, utility fees, everything that goes into the construction of a solar project is eligible to be covered under this investment tax credit. And there are a couple of additional adders that were added a couple of years ago, domestic content, and depending on where you might live geographically. And if this is something that's applicable, we would discuss that with you as well. And as I mentioned earlier, these tax credits are those that can be applied 3 years in arrears, or they can be sitting there for you to soak up over the next 20 years. So you may not have the tax liability or want to absorb the tax liability right away, and that's okay. Work with your tax person and use them as you want to. You have up to 20 years to do so. Once you've qualified, made that investment, those tax credits are there for you to keep until they're exhausted. On the right side in orange are some deadlines that we're looking at right now. And there are two important deadlines out there, July 4th of this year and December 31st of next year. And the July 4th deadline is soon, and it's fast approaching, obviously. And it's intended to allow a really large solar project some time to be constructed. And just like I said, we don't build those solar arrays that take up acres in the fields. This is really where that tax credit comes in to help those projects because they will take a couple of years to construct. But as long as that project is signed by July 4th, those projects have 4 years to be completed. The projects that we're going to construct generally are going to take 3 months, maybe 18 months, depending on how much utility work we have to go through. So that there's time on that side. So this deadline of July 4th of this year is important for that aspect. That likely won't apply to most of you in the audience at this point. But what it will also change in July 4th is the content of the material that's being constructed that we're using, putting in place. So how a solar panel is constructed, the components of it, the inverter, all of the parts. Those rules are going to change most likely in a more restrictive way starting July 4th. We don't know what those rules are going to necessarily be yet, but if you're compelled to and want to get this project by July 4th, you're safe harboring any changes that might come down the road the later on this year or into next year. The most important deadline on the screen, though, is this one by December 31st of 2027. This investment tax credit of 30%, as we know the rules right now, is going to be there for a business to capture if the project is completely constructed, turned on, and to make an electricity by December 31st. To put it another way, you can't come to us or a solar company December 1st of next year and say, hey, I want to get started on this and I want to capture that investment tax credit. There's just simply not enough time left on the clock to do that. And as I've mentioned down at the bottom, there's a lot of pre-planning. There's a lot of things that we coordinate with our utility companies, permitting with our cities and counties, and getting that material purchased. And a solar project may take only 3 months, but it might take up to a year and a half, depending on the complexity and what the back ordering time might be for a piece of equipment that the utility company might be. And I'm in the middle of one of those right now. There's a piece of equipment that the utility company needs that's on back order for almost a year. And that's not anything anybody has any control over, least of which is the utility company. So those are just the cards that we have been dealt. So if you're in a position to take advantage of and you want to invest in the solar project, doing so sooner rather than later it has clear incentives for doing so. I call this the softer side of solar, the environmental and social and governance value. Some of you might recognize that and know that there is value to be qualified as that. I call this the softer side though, because my daughters were 2 and 6 when I finally figured out what I want to do for the rest of my life. And I wanted to help make this world better around them, the air cleaner, and save money if at all possible, and reduce what's going on for carbon emissions. So when you invest in a solar project, you're not only doing good for the planet, you're also doing good for your brand. And that's really where I want to spend some time right now. A good portion of supply chains up and down from where you're located are looking at solar energy, renewable energies, the emissions that you put off as a company in determining whether or not they add you to their supply chains. And major corporations such as Walmart and Tyson and Cargill, for example, require their suppliers to meet certain emissions goals. When you put a solar array or a renewable energy project up, you can obviously say that you're powered 100% by solar energy or some portion of it, depending on how that circumstance works. But I guarantee you that your competitors aren't all going to be able to say that. So this starts to differentiate you from your competitors. And what you're going to be able to do with your solar array is you're going to be able to see it on your phone. You're going to be able to see it on your computer, and you're going to be able to monitor it from day to day. But the beauty of that information is that you can also put it on your website. You can tell your customers, you can tell your supply chain that you're using a renewable energy and this is how much it's doing for the environment. So that knowledge and that understanding is going to be appreciated by more people than you might think right now. The bottom left, there are some matrix through the environmental, social, and governance and sustainability goals that when you're applying for grant funding or you have to report out, having some of these goals in place gives you more points on those applications. So it might put you in a stronger position to receive those grant fundings. And finally, to finish up on the softer side thinking process, your employees are going to recognize that you're putting in something that's it's a long-term investment. It's going to do long-term good, not just for the company's bottom line, which is obviously important to them as well, but also for the environment around them and cities that you're in and other neighboring businesses or homeowners are going to recognize that as well. They may not ever say thanks, but they're clearly going to recognize that as an investment that you're making. And as I mentioned in the beginning, this is it. There's a couple of easy things that you can do to get started on this to explore whether or not this is something that you might want to take on. And it all starts with just understanding how you use electricity. Depending on your utility company, just going back 12 months and seeing how many kilowatt hours you purchase and how much that cost you, and putting that through an analysis and helping us to and letting us design preliminarily some ideas for that solution is all that it takes. You are then going to have the information to make a decision and to take action if this is something that makes sense in your capital budget. And I'll leave with this slide. There's actually one more at the very end, but this is the last important one. If I say anything today, it's a reminder that there's a very strong tax incentive in place right now that is going to absolutely come to an end at the end of 2027. And as I've mentioned earlier, all of the planning, the engineering, the procurement, the approvals that we need from our utilities and our jurisdictions, that's going to take time. So build that into your thought process, build that into your planning, because if you decide to do solar, but it's not until sometime next year, you might simply run out of time to be able to take advantage of those opportunities. And with that, Thane, I will leave it up to you guys to turn us over for questions and answers. I have my contact information on the screen, but by all means, I think our marketing team is on this call right now. Please go out to eaglepointsolar.com, give them a call. They have a lot of great content and a lot of information for you to understand how solar technology works without ever having to talk to anybody. So thank you all very much for your patience and your time and attendance here.
We appreciate having somebody so knowledgeable about it doing it for us. Thank you, Chris. We do have a question come in, and it says, discuss 1 year depreciation, any carryover before July 4th.
They it's all going to be the same. Depreciation just has to happen in depreciation has to happen in 1 year. So if you decide to do a project and you decide to put it on your 2027 tax return, it all has to be captured at the same time. You can't spread that out over a number of years that you like you might be with other depreciable assets. So while it's nice to be able to take it all in 1 year, sometimes that's difficult and you got to plan for it. I'm hoping that that answers the question, Thane.
Thank you again, Chris, for being, for being here and being so knowledgeable about the industry and about business and agricultural using solar power.
My pleasure, Thane. Thanks for having us.
All right, thank you.